back. You're watching Buy Now, Sell Now on ET Now, and let's talk about earnings. You had Raymond that came out with its earnings, and it was a good set of numbers coming in for that particular counter. You had a good growth coming in as well, but the stock is actually under pressure like the rest of the market. But let's talk more about the earnings and the way forward for the company with the management themselves. We'll be joined by Mr. Amit Agarwal, who is the Group CFO at Raymond. Good morning, Mr. Agarwal. Thank you so much for joining us on ET Now. Congratulations, firstly, on a very strong set of numbers for this quarter. What actually led to the strong growth, as well as what's your guidance going forward?
So look, actually, we are very pleased to have a very good set of numbers, and it is very clear. I can explain to you that when the markets open, with the strength of our brand and the distribution network, we are able, with our quality products, we are always able to get a very good traction for our products. And especially once the lockdown started to lift after the second wave, we saw good traction of people coming in. Then the festive demand, let's also realize that for 2 years, people have not celebrated any festival and such things, and followed by a very, very strong wedding season. And we look at the weddings, and Raymond as a player plays a very, very significant role in the wedding. And we got a good opportunity to sell our products with our new collection. And that has really helped in terms of boosting our revenues. Now, in terms of the other businesses, as I look at it, our engineering business, which is very strong business, combined with tools and hardware and auto business, we have also seen very good growth coming from the export market as well as in the domestic market.
Good morning, Mr. Agarwal. This is Vinny joining in as well. Obviously we did see a good festive season, but I do want to talk about, the board has actually approved a demerger of the real estate business undertaking of the company to Raymond Lifestyle. Now, what is the growth outlook for the realty business looking like, and what is the incremental revenue potential that we are looking at from this business?
Yeah, absolutely. You see, real estate business is becoming the new material business of the Raymond Group. First it started with a monetization of the land which we had at Thane, or which we have at Thane. And now, based on the success which we have received, and we have got the customer appreciation in terms of both the product, the configuration, as well as the amenities which we have provided in our aspirational project at an affordable pricing. So that has helped to boost our real estate. Now, after that, we launched also the premium project, which I just mentioned, which has also got within 45 days over 100 bookings, which shows that our quality of the product is very, very good. Second thing, which is very, very important in today's time, is also the pace at which we do the construction. Now, we have already announced as very unique feature in ourselves that we will be delivering a lot of apartments to the people 2 years ahead of RERA. That means in December of this year, on 10th of December, people would start getting apartments in our original construction tower. That is the aspirational project.
Any separate plans that you have for listing the FMCG entity for further value unlocking? Also, if you could tell us what is the update on the consolidation of the B2C business in Raymond?
So look, as we said, the group has been very, very clear in terms of unlocking the shareholder value. And if you see, one of the 3 steps which we talked about in September, we took 3 big steps. One, consolidating the entire B2C business at the Raymond Limited, moving the apparel business from Raymond Apparel Limited into the Raymond Limited. Now, this is in progress. We completed our shareholders meeting. We completed our lenders meeting. Now the matter is with NCLT. We will have to wait until the NCLT announces the order. That's number one. As far as engineering business, as I mentioned to you, the announcement the board approved on 27th of September that we consolidated the engineering business, the tools and hardware, and the auto components business. And we have also filed the DRHP on the 9th of December. And as we speak, we are awaiting the clearance from the SEBI. And then when we do that, we will do an OFS, offer for sale, which will again money coming into Raymond Limited and reducing the debt at Raymond Limited. So clearly, again, an unlocking of the shareholder value.
Right, Mr. Agarwal. I do want to just talk about one thing is the significant debt reduction by 310 crore rupees, that we're seeing this time, mainly through internal accruals. Now, that is leading to a net debt of 1,250 crore rupees approximately. So, what are your debt reduction plans for the future, and how are you looking at further reducing it?
Sure. I think, consistently the group has been very, very focused, very strong deleveraging plan. And as we stand today, we are at 1250 crores. We have a plan of an IPO, which I just mentioned about, that 800 crores we would raise in the IPO. Now that is going to come to Raymond Limited, which is going to further reduce the debt. So our philosophy is very clear that the cash flow generations effectively manage your cost so that you generate a very strong EBITDA performance, cash flow generation, as well as closely monitor the working capital. Now, if you look at the working capital, we have been one of the lowest working capital the company has been able to achieve by very sheer focused receivable management, inventory management. So we are very clear that we will sell our goods when we collect our money. It is not that we will sell the goods and keep on waiting for our collections. So there is a timeline which the customers get, and in that timeline, they have to pay. And if they can't pay, we will stop deliveries. We are very, very clear.
Right, Mr. Agarwal, we leave it at that. Thank you so much for joining us on the show, telling the way forward for Raymond and what actually contributed to strong growth this quarter, in the previous quarter.